How's it going, everyone? Welcome back to another Hbar update. In this video, I'm going to discuss whether it's possible for Hbar to reach $1 this cycle or close to. So at the moment, you can see these Fibonacci targets, although they're projecting future macro targets, they're not yet valid. We need to see a good few things first. Let me mark out the most key resistance of them all. It's the golden pocket area. Now this actually spans all the way down to the 0.5, but I break it up and I just mark out the most important zone, and that's the 786, 886 area. You could argue a move up into there could just be corrective, and you could still get a new wave down lower. It's not what everyone wants to hear, but it definitely could be the reality. Look at this previous example of this double top. It would have been the same formation. The 886 would have been rejected. As you can see, looking like there was development. It looked like it was going to sustain this move up as all the moving averages had been recovered and bullish crosses are forming. We're getting higher highs above these local ones. We're building up higher lows. So everything's in its favor, and yet it just fails to break the 886. So this is why I was saying this is, as a micro version of this, you could argue this pump could be false, could be the beginning of a bear market, right? So that's always going to be in the back of my mind. And that's why my main focus is always going to be the Bitcoin chart. I need to make sure Bitcoin is breaking out for me to even consider alts. That's just my strategy. These are the conclusions I come to based on the experience and using the strategy. So what I'm looking for is a pattern to take us up into that resistance. Remember, could just pump into there, bring new lows. But once that has been flipped into support, I have different expectations. My expectations would be these targets up here, anywhere between 55 and $1.28. Now, 55 cents is too close. I think that's the previous all-time high, or very close to, so I'd expect higher than that. We'll look at this in a bit more detail in a second. Let's now zoom in to this area over here, discuss the immediate short-term moves that we need to see to get this move up towards 35 cents in the first place. Let's ignore those higher projections right now because we don't know if we're going to break through this resistance, this brick wall. So at the moment, there is a bullish pattern forming, can come down lower, but there's signs of this inverse head and shoulders pattern. This is what we need to see for bottoming out structure. And if you look at market cycles, you get this complacency stage and then this capitulation event, and right down into the anxiety, despair stage. That is where you form the bullish pattern, and we can see signs of that. Even if it's not inverse head and shoulders quite yet, you could argue if we do come down a bit lower, a double bottom could form. So there is going to be, there is a bullish pattern forming so far, as long as it maintains 12.5 cent. So the lowest I'd want to ever see it go with a body candle closure is 13.3 cent. I don't really want to see any candles closing beneath that point. This would be the lowest point of a reversal. So we can actually reverse as early as today from this area, 16, 17 cent. The issue is Bitcoin itself, and also leading into the weekend, Bitcoin's showing a bit of weakness. It's got a head and shoulders pattern, as you can see over here. And we're coming into Friday as well. Stock market shuts on the weekend. So it's not looking too great because the bearish setup is there. It's not yet lost the neckline. So of course it can just pump. I need to see 105.7k recovered. But at the moment, it looks like it wants to test 100k. And if that's the case, then I need to project these future supports for you guys. So already mentioned that 13.5 cent. Don't want to ever lose that if body candle closes under that point. If Bitcoin bounces from exactly now on the dotted line, then it's going to reverse from 16 cent. Otherwise, it's going to continue down into the next two levels, two areas. So at one of these areas, we're going to spot this reversal. Another signal that I'm waiting for is the reclaim of the 382 fib. I've created this area here of resistance. So once that's recovered, it becomes support, of course. Previously, when we were dumping, I was one of the earliest to call this double top here. We got this extremely bullish candle, or so it looks like. That's what the sentiment and what people were saying all over social media. But me, with my years of experience, years of knowledge, I'm not fooled by a candle like this. It's actually a horrible candle because it quickly enters longs, gets them out of the way, so it's a lot easier for bears to go ahead and liquidate those positions. And that's literally what it went ahead and did. Even on this move back up, I was saying don't get excited because it's just turning previous macro support into resistance. Some people were laughing at me, not all, but in the end, I ended up being right. Now, this area got a little bit wrong because I was assuming that this low was going to hold because we also had the 200 EMA in this location. And although we saw it actually lose the 200 EMA here, you could argue while it's still above that key level support, it could easily find its way back above the 200 EMA, breaking out and forming a macro double bottom. So going from a macro double top into a macro double bottom. Unfortunately, we had one leg down lower, and that's the beginning of the creation of the bullish pattern. The bullish pattern could have come from here. A market cycle or a pump and dump ends with a pump finishing with a double top or head and shoulders, and then the dump ends with a double bottom or inverse head and shoulders pattern. So there were signs and clues that it could be from here, but without seeing the moving averages reclaimed, they're still bearish. Eventually this low gave in and the trend is bearish. So we need to see characteristic changes now. And that's what we got on this wave back up, recovering that same level once again. Yes, we'd love for it to hold and just get out of this mess. But guys, with a move up, any direction, up or down, it can retrace its own move, 88.6%, and still continue in the bullish direction. So you could see and argue how that would be a macro inverse head and shoulders or just a double bottom over here. These are the signs that we need to see. Even though if in the immediate short term that could still be lower, you're not going to be getting a greater DCA area than this long term if Bitcoin brings new all-time highs, if Bitcoin is going to break out, and go into price discovery mode. That would force everything to go up. So yeah, you could DCA down here with the belief it is going to break out, or wait for that to be seen, that to be shown. So wait for the breakout. At that point, I assume Hbar should get back above 19.5 cents, and that's what's going to initiate the move back up into 35 cents. That is how we can start talking about 82 to $1.28. Zooming out even more now, going back a few years, all the way back to the previous bull market top back in 2021, there's actually some further confluence here with my $1 target area. So you can see now the macro 1272 is $1.22, lines up with the 2 Fibonacci. Can you see how what's interesting? Look where we experienced this dip. Look where it began from, on the macro 886. So there's a lot of weight on this level, whether it's micro analysis or macro analysis. We're not going to get out the woods. We're not going to go into price discovery mode until that macro 886 is broken. But we need to worry about 30 and 35 cents first. Wow, it's interesting that the fibs are aligning. This is called confluence. If I were to see the 786 broken here, I assume that 886 is going to happen. Funnily enough, I'm just getting kind of the same message here, because on the break of this smaller golden pocket, these targets now become valid. So it makes sense. Once this 786, 886 is breached, I have those expectations. And then of course, once this is breached, I have that expectation. And that'll be a new local high above the January high. So we'd have a breakout, we'd have macro higher highs after this macro higher low. And then the assumption is new all-time highs are coming, and the first targets beyond those all-time highs would be 82 cents. You could argue that a pullback happens from here, which could be 50, 60%, bringing it all the way back down into 30 to 42 cents. And then from there, continuation up into $1.30 area. That is it from me today. If you want to get educated, learn the strategy for yourself, or just want more videos, more content, check out the Discord community. If you're someone that wants to create a DCA plan or wants some mentorship, any consultation calls, links are down below. Otherwise, like, subscribe, comment, and share.